Welcome everybody, and today we are going to revise the chapter called as salary. Yes, this will be coming in two different parts. First one will cover the retirement benefits, and second, the first one includes retirement benefits and allowances, and the second one will have all the perquisites for your salary. And don't worry, it would not be skipping something and teaching something. Every aspect of salary chapter, what will be taught in your regular class, will be revised. Each and every point will be revised. Some special critical points which are not written in your textbook, that also will be revised in the class, so that you will be able to solve the problems with ease. And the bonus thing, in the description you can find the notes, so that whatever you are listening, whatever you observe on the screen, will be available with you for your next revisions. So without waiting, we will start. But one important thing, don't just watch it like a show or a movie. Repeat with me again and again, so that you will really remember it forever. Because if you don't involve, then you will not remember. If you involve, if you repeat, if you actively participate, you write the notes, then definitely it's guaranteed that it would be more fruitful for you. And that's what I feel, that you should become more successful, and I should be able to contribute more to your happiness and your success. So with this note, we will start with the video. Of course, you would have subscribed to the channel, so I need not tell all that you should like the video, subscribe to the channel, right? So let's start. Hey, what is this? Income under the head salary. How many heads of income are there? Come on, please remember, 5 heads of income. First one, income from salary. First one, what? Income from salary. Second one, income from house property. Third one, come on, in profits and gains of business and profession. Fourth one, income from capital gains. And fifth one, income from other sources. So 5 heads. Chalo, repeat with me. First one, income from salary. Second one, income from house property. Third one, income from business and profession. Fourth one, capital gains. Fifth one, other sources. Now, to tax any income under the head salary, we should remember that employer-employee relationship should be there. What is required? Employer-employee relationship should be there. Now, how can we say that employer-employee relationship is there? If you are working under the control and directions, then employer-employee relationship is established. Sundar Pichai, CEO of Google, cannot do whatever he feels on his own with Google. He has to act according to the policy framed and as per the directions of the board. That means the top guy also is an employee who is working under the control and directions of the board. Same way, if you are working in Deloitte, then you will be working according to the instructions given by your manager, superior. So you are an employee who is working under the directions of your employer. So if the employer-employee relationship is established, you're working under the control and directions of your boss, then yes, your income will be taxed under the head salary. But there are certain special cases which we have to discuss. And also remember that if there is master and servant relationship, still we can say that yes, the income is taxed under the head salary, because servant works under the control and directions of the master. Yes or no? Chalo, first thing, in our regular language, we say salary is given to office employees and wages are paid to laborers. Income tax says we don't differentiate. Even if it is salary or wages, both are taxed under the head salary. Suppose you are a partner in a partnership firm and you are getting some salary. Now, should it be taxed under the head salary? The answer is no. Why? Because you are a partner, you are the owner, you are not working under any other directions, correct? So that's why partner's salary or partner's commission or partner's bonus received or partner's remuneration received is not taxed under salary. But then where it should be taxed? It is taxed under the head profits and gains of business and profession. So partner salary, remuneration, commission, bonus, interest, all are taxed under the head business and profession, not under salary, because he is not working under the control and directions of others. There is no employer, no boss to the partners, correct? Very good. Come to the third point, very important, director's fees. Now you are a director in a company, you attend meetings, you get some fees, so where it should be taxed? Are you an employee? No, right? You are just a director. Occasionally come to the company, attend meetings and give some suggestions and get out. For that you get some fees. So that is taxed under the head income from other sources, because they are not employees. Okay? But suppose some directors are there who work full time in the company. They get director's remuneration like Sundar Pichai, Satya Nadella, right? So these are the people who are working full time in the company. So if they get something, it is taxed under the head salary, because they are working under the control and directions of the board of directors. Okay, under the directions of company also we can say. So these are the things we should understand. Suppose you are working in a company and you retired, and after that you started getting pension. Now pension received by retired employees is taxed under the head salary. But suppose the person dies, the pensioner dies, and the family members receive pension. What about that? It is taxed under the head other sources. Why so? Because the employee receiving pension, employer-employee relationship established. But the family member receiving pension is not employee, right? That's why income from other sources. Suppose you are working in a college. Suppose I am working in XYZ college as an employee, full-time employee, and receiving salary. I was asked to correct the papers. So I corrected the paper. They paid additional money to me. Then that additional amount received is also taxed under salary. But suppose I correct the papers of CA Institute, CMA Institute, CS Institute, Usmania University, or maybe IIT, IIM, whatever, and I get some fees for correcting the papers. This is taxed under income from other sources. Why? I am not the employee of any of these institutions. Clear? Very good. This way you should remember what we discussed. Come on, let's play the game. I'll tell you something, you have to repeat. Okay, you have to tell me the answer. Hey, wages taxed under salary, partner salary taxed under PGBP, director's remuneration taxed under salary. अरे remuneration रे बाबा, director's fees taxed under. अरे आपको पूछ रहा हूं, बोलो. Director's fees taxed under income from other sources. Pension received by retired employee, salary chapter. Very good. Pension received by family members of the deceased employee, other sources. Very good. Remuneration received or some fees received for correcting the papers of university where you are not the employees. Which head? Come on. Other sources. If you are the employee of such institution, then it is salary. Suppose you have foregone the salary. I am talking about new things. You have left the salary, chhod diya. Maybe you transfer the salary to some other. Without receiving it, you say to your employer कि salary मेरे को नको दो रे बाबा, give it to some other person. This is foregoing of salary. Then it is taxable under salary only. And one more thing, because you have foregone the salary, income tax department will not say that okay, you need not pay the tax. They will say we will compute the income under salary and will calculate tax and will ask you to pay the tax. Okay, next thing, if you are surrendering salary to the central government under the surrender of salary scheme, hey, you are paying entire amount to central government, right? then how can government ask you to pay tax again? No need to. That's why surrender of salary under the central government scheme, then salary is not taxable. You may receive salary from former, present or prospective employers. What is former? Right, sometimes you worked in some institution, they did not pay salary on time, so they delayed it. You left the job, so you received salary after you left the job. Then you received salary from former employer. Most of the cases you receive salary from present employer, and sometimes you may receive salary in advance from the prospective employer. Suppose Tata company asked me, Ganesh ji आइए हमारे company में. I said okay, I am ready to come join your company, but I want 6 months advance salary. Tata said okay. So what is this? Salary from prospective employer in advance you receive, and all are taxable. Okay, wonderful. Next thing, contract of service and contract for service. Suppose you are working in a company, then you are doing something called as contract of service. Employer-employee relationship is there. Contract for service is a professional service given to client. So it is independent, right? The professional who is giving service and the client both are independent, right? Professional is not doing as per the control and directions of the client. So that's why contract for service is taxed under business and profession head, not under salary. But if it is contract of service, employer-employee relationship established and taxed under salary. Clear? Very good. Now come to the next thing. Sometimes you receive advance salary. That means next few months salary you received in advance. So this is salary and taxed under the head salary. But suppose sometimes advances against salary word is given. Sometimes which word is given? Advances against salary. Now don't confuse this word. This is loan. The employer is giving you loan. So advances against salary means a loan. Okay? And advance salary means salary paid in advance. Difference should be there and you should not get confused. If in the question they give advance salary, you can include in the salary table and tax it. But if it is advances against salary, it is a loan, don't include in the salary head and don't consider it as income. Advances against salary is loan, not salary income. Okay, and with these few special things which we discussed, let's come to the very important section 15, the basis of charge. Some people call it as charging section. Nothing wrong with it. So basis of charge or charging section means what? That means this gives the right to tax your income. Okay, how? So salary is taxable on receipt or accrual, whichever is earlier. What I said? Receipt or accrual, whichever is earlier. What I said? Receipt or accrual, whichever is earlier. So when you see any questions on this, they will give you the date of receipt of salary, the date of accrual of salary. Now you write both the dates and write whichever is earlier. Once you get all that dates, if the dates fall in your previous year, right, then it is taxable. That's it. Okay, clear? Any doubts? No. Wonderful. Now come to the pro forma. See, section 15 is basics of charge or charging section. Receipt or accrual, whichever is earlier, we understood. Now basic pro forma, how salary income is computed. So computation of income from salary of Mr. Falana Dakana जो भी person है, for the assessment year जो भी है लिख दो, particulars amount. Come, basic salary. This is very important. First ingredient of salary is basic salary. Second one is obviously your bonus, commission, fees, right? Then you will get allowances. So many allowances are there, perquisites are there, profits in lieu of salary is there, gratuity is there, commission is there, superannuation is there. Now you may say, sir, ये क्या कर दिया? What you said, what you did? Hey, I just tried to read out everything. Advance salary is there. See, advance salary is there. Advances against salary is not there. Okay. Arrears of salary is also there. Basics, all these things include. Then we'll call it as gross salary. Okay. List याद रख लो. Right. Remember the rest. Why? Because all these I'll discuss in detail later on. But list you should remember. Again repeating for you. Basic salary, bonus, commission, fees. Right? Allowances, dearness allowance, perquisites, leave salary, gratuity, pension, advance salary, arrears of salary. Are you able to connect? Yeah. Leave encashment. So many things are there. Provident fund. So all these you include, you will get gross salary. And after that, you deduct 3 items. What are the 3 items? Come on, repeat with me. First one, statutory deduction. This is 50,000 flat. Okay. Entertainment allowance, which we'll discuss later on at the end of the chapter. Professional tax. What is this professional tax? We'll discuss at the end of the chapter. Professional tax is nothing but employment tax, which you actually pay to the state government. Very nominal, 200 rupees they actually deduct. When I actually received salary, I observed in 2 different institutions. So it depends upon how much salary you are earning. But yes, basic to 200 रुपए तो cut करते. Professional tax. Right? Professional tax is also called as employment tax. Entertainment allowance we'll discuss later on. Standard statutory deduction is 50,000 flat or gross salary, whichever is lower. Suppose your gross salary is 30,000. Statutory deduction 50,000. Can you deduct? No, right? So that's why 30 or 50, whichever is lower. So gross salary or statutory deduction, whichever is lower. Any doubts? No. Wonderful. Statutory deduction fixed limit is 50,000. Please remember. This way we should remember the whole pro forma. Once from gross salary you deduct statutory deduction, entertainment allowance, professional tax, then you will get total taxable salary. Clear? Any doubt till now? No. Wonderful. Now let's start with the retirement benefits. Yes, let's start with the gratuity topic. What is gratuity? जिंदगी सौंप दी तुमको हमने. Right? This type of dialogues you will say to the employer, right? In the whole day, if you remember, 6 to 8 hours you sleep. Right? And 9 to 10 hours you work in the company. That means 6 plus 9 if you do, 15 hours, 16 hours, and traveling if you include, 17, 18, 2 hours I am including. Balance only 6 hours. So what is the maximum time to whom you are giving? Are you giving more time to your family or to the employer? You are giving more time to the employer. So zindagi de di tumhe, like that you should say to the employer. So employer will say, okay, you have given lifetime commitment to us. You have worked for more than 5 years. We are so thankful to you. अरे बाबा सिर्फ थैंक यू से नहीं चलेगा. That's why employers give you gratuity. So gratuity is a lump sum payment given by the employer to the employee. Oh, what I said? Gratuity is the lump sum payment given by the employer to the employee at the time of retirement. So what is gratuity? Gratuity is lump sum amount given by the employer to the employee at the time of retirement. Please remember this. Okay. Now salary. अरे ऐसा याद रखना, जोर जोर से बोलना. You have to talk loud and clear. अरे when you whatever you studied in school you remember, yes or no? Why? बड़े होने के बाद जितना ज्यादा पढ़ते ना वो भूल जाते. क्यों? बचपन में जोर जोर से पढ़ने की आदत रही थी ना, अरे करो वही आदत, जिंदगी सेटल हो जाएगी. Life will be settled if you try to remember, shout out and read. Nothing wrong with it. But remember, habit is wonderful. Implement. Okay. What is the habit I am talking about? Whenever you are revising, shout out loud. When you shout out loud, you will be able to hear. Right? That vibrations in the room will help you to remember the topics. So chalo, let's shout out loud. If gratuity is paid to the government employee, दामाद जी है भाई, fully exempt. So if any gratuity is paid by the government to the government employee, it is fully exempt. If gratuity is paid by non-government employer, what I said? Non-government employer. That means private employer. Reliance, Adani, right? Non-government employer. Then they categorize in two parts. What are they? Are you covered by Payment of Gratuity Act 1972? Are you not covered by Payment of Gratuity Act 1972? Government employee, forget, fully exempt. But non-government employee, divide into two parts. What are they? Covered by Gratuity Act 1972, not covered by Gratuity Act 1972. So, whatever gratuity received minus least of the following three. What I said? Whatever gratuity received, the actual gratuity received, minus least of the following three will become the taxable. Suppose example, you received gratuity 10 lakhs and the least of the following three is suppose 2 lakhs. Then 10 lakhs minus 2 lakhs, 8 lakhs will become taxable salary. Oh, gratuity. So what are the least of the following three? I'll make it very simple for you. Come on, concentrate. करोगे ना? हाँ. चलो. First, are you covered by Gratuity Act? Are you not covered by Gratuity Act? In both these things, first two are common, right? Actual amount of gratuity, yes or no? So both have same thing, right? In here also actual amount of gratuity, there also actual amount of gratuity. Second one, here also 20 lakhs, there also 20 lakhs. So 2 points are same, actual amount of gratuity and second one 20 lakhs rupees. Now clear? Only third thing specially you should remember. Chalo, let's start with covered by Payment of Gratuity Act. So if you are covered by Payment of Gratuity Act, least of the following three is exempt. First one is actual amount of gratuity, second one is 20 lakhs and third one is last drawn salary into 15 by 26 into completed years of service rounded off. What I said, last drawn salary into 15 by 26 into completed years of service rounded off. So what is salary here? I am talking about covered by gratuity. अरे याद रख मेरे दोस्त, covered by gratuity. Okay. So what I said, salary is equal to basic pay plus DA. क्या बोला मैं? क्या बोला? Basic pay plus DA. What I said, basic pay plus DA. Salary is equal to basic pay plus DA. I am talking about covered by Gratuity Act. Salary is equal to basic pay plus DA. So last drawn salary into 15 by 26. Now why 26? Because they said in a month 4 Sundays are there. So 30 minus 4, 26. Okay. Why 15? Because in the whole year, when you work for 1 year, the employer is so happy that he is willing to pay you 15 days salary for your gratuity contribution. So आपको 10 साल 20 साल 10 years 20 years you worked, right? So 10-20 years after that they want to give gratuity, but how to give, how much to give? So employer said, okay, if you work for 1 year, at least 15 days I will give. That's how they got 15. So last drawn salary into 15 by 26 into completed years of service. How to compute this? So whenever you compute, you have to round it off to the nearest. So now completed year I said. So you should take only years. You cannot say that 20 years 3 months. No, not allowed. So suppose if it is 20 years 3 months, take 20 years. 20 years 6 months, take 20 years. 20 years 6 months 1 day, take 21 years. 20 years 7 months, 21 years. 20 years 11 months, 21 years. So if it is 6 months 1 day or more, I said 6 months 1 day or more, next year you take. If it is up to 6 months, take the completed years and ignore the next balance period. Okay, this way you should remember. Now suppose there are so many seasonal factories like sugar factory. Now giving 15 days would be unfair for employer, right? He will be taking the services of employee only for 4 months, 5 months, that's it. So that's why this 15 is replaced by 7. 15 will be replaced by 7. 15 will be replaced by 7. So what will be the formula? Last drawn salary into 7 by 26 into completed years of service rounded off. This will be for seasonal employee. So for seasonal 7 by 26. For others 15 by 26. Okay. So covered by Gratuity Act, fully clear, yes or no? Chalo, come on, again repeat. Covered by Gratuity Act. So what they said, least of the following 3 is exempt. First one, first one kya hai? Actual amount of gratuity. Second one, 20 lakhs statutory limit. If any exempted amount is there, you can deduct from 20. So actual amount of gratuity 20 lakhs. Third one, last drawn salary. Salary is equal to basic pay DA into 15 by 26. Right, seasonal 7 by 26 into completed years of service rounded off. Learned? Clear? Yes sir. Now if you are not covered by gratuity, again list of the following 3 only. Again first 2 are same, actual amount of gratuity or 20 lakhs is same, but third point is different. What it is? Average monthly salary. Average monthly salary. I'll tell you, don't worry. So let's discuss this average monthly salary. Salary means I'm talking about not covered by Gratuity Act. Right? Salary means basic pay, DA retirement and commission as a percentage of turnover. Basic pay, DA retirement and commission as a percentage of turnover. Now basic pay means what? You know. DA retirement means what? DA is Mehengai Bhatta, right? For the inflation the employers pay. And DA also has 2 components. One, covered, forming part of retirement benefit. That means this DA will be used for computing your retirement benefits like gratuity, pension, right? So DA forming part of retirement. Commission as a percentage of turnover. Sometimes they say that you will get 2% commission on sales. If they say like this, take it here. If they say commission 5,000, don't take it here. Okay. So what I said basically, I said that salary, if you are not covered by Gratuity Act, salary is equal to basic pay, DA retirement plus commission as a percentage of turnover. Don't take fixed commission. Now come to the next thing. Now I said average monthly salary. I am talking about not covered by gratuity. Third point. What is it? Average monthly salary. So salary, you know, basic pay, DA retirement, commission as percentage of turnover. Then what is average? Average is 10 months average salary. क्या बोला मैं? 10 months average salary. So 10 months from where? Ignore the month of retirement. What I said? Ignore the month of retirement. Suppose you retired on December 15th. So ignore these 15 days. Count November, October, September, August, July, right? Like this you should compute. June, May, April, March, Feb. So Feb to November you will count. because you retired on December 15th. So ignore December month. If you retired on December 20, ignore December month. So retirement month should be ignored for computing 10 months average salary. Clear? So how will you calculate 10 months average salary? So ignore the retirement month. December month you ignored. So November to February. So we can straighten up by saying February to November. Now if there are any salary changes during these months from February to November, calculate each month separately. What's wrong with it? Salary, basic pay of February, basic DA retirement of February, commission of February, separately totaled. Like that March, like that April, like that May, June, July, separately you calculate. Then do the total of that 10 months divided by 10. You will get average monthly salary. If there are any fluctuations, if there are any changes during Feb to November, then you do this way. Okay. So what is the third point if you are not covered by Gratuity Act? Average monthly salary into 1 by 2 into completed years of service, fraction ignored. Fraction ignored means what? If it is 20 years 1 month, 20 years, 20 years 3 months, 20 years, 20 years 6 months, 20 years, 20 years 11 months, 20 years, 20 years 9 months, 20 years. So whatever extra is there, even 20 years 11 months, 29 days, still ignore that and take only 20 years. This you should remember. Clear to all of you? So what is the third point if you are not covered by Gratuity Act? Average monthly salary into 1 by 2 into completed years of service, fraction ignored. This way you should do. I did detailed analysis for you so that you will not do any mistakes. Suppose in the question they don't tell that are you covered by Gratuity Act or not covered by Gratuity Act. Then decide he is not covered by Gratuity Act. If in the question they don't tell you are a government employee or non-government employee, then decide that he is non-government employee. So you should assume that if they don't tell government, non-government, it is non-government only. If they don't tell covered by Gratuity Act 1972 or not covered, then it is always presumed that not covered by the payment of Gratuity Act. Suppose you receive gratuity during your service. Suppose you are doing job, you did job from last 8 years and you are continuing in the same company, but company gave you the gratuity. During the tenure of service, if you receive gratuity, it is fully taxable. Job करते करते मिल गया तो fully taxable, right? ये exemption less करने की जरूरत नहीं. You need not deduct this. Okay. Suppose example, if the retired employee gets gratuity, then treatment will be like whatever I said till now. If suppose the retired employee died and legal heirs received the money, gratuity amount received by legal heirs, then also same treatment what I discussed till now. But suppose the employee was doing the job and suddenly he died. That means his retirement did not come. He died before retirement and then legal heirs received it. It is fully exempt in the hands of legal heirs. So what I said, if the employee retired and received the gratuity, same calculation till now. If the employee retired, later on died and so legal heirs received the money, then same treatment as we discussed till now. But if employee died before retirement and legal heirs received the money, then fully exempt. This way you should be able to understand what I said. Clear? Very good. So many problems are there in this regard. I don't feel that you will get confused by solving the problem with this clarity. So much in-depth clarity notes you will not get anywhere. So download the notes, share with everybody in your circle so that everybody is benefited, and share these videos too. Let's continue with now pension. What is pension? Something like which we get monthly? Yes. So after retirement, if you get monthly some amount, that we call it as pension. If you receive the same from the employer, we call it as pension. So this monthly pension is fully taxable. We also use the word uncommuted pension for this. What I said? We also use the word uncommuted pension for this. We also use the word uncommuted pension. Monthly pension, uncommuted pension, fully taxable. You are government employee, non-government employee, doesn't make difference. Monthly pension, uncommuted pension, fully taxable. But sometimes you may urgently need some lump sum amount. So government or private employers also give you the facility that you can commute it. That means you can receive it in lump sum. So if you receive in lump sum and you are a government employee, then no problem, fully exempt. Damaji hai, right? So commuted pension received by government employee, fully exempt. हाँ बेटा बना के काम करा रहे मोदी जी, कोई टेंशन मत लो, right? So commuted pension is fully taxable. Wait 1 minute. So commuted pension is there. If it is government employee, fully exempt. But if you are non-government employee, government employee fully exempt, government employee fully exempt, right? What I said, pension. Pension is monthly amount which you receive at the time of monthly on after retirement. So if it is uncommuted monthly pension, fully taxable. Whether it is government, non-government, fully taxable. But if it is commuted pension, lump sum pension, received by government employee, fully exempt. If it is received by non-government employee, then ask a question, are you also receiving gratuity or not receiving gratuity? Please, I am not talking about Gratuity Act. I am only talking about, are you receiving gratuity? If you are receiving gratuity, then only 1/3 of the full value of commuted pension. What I said? 1/3 of the full value of commuted pension exempt. 1/3 of the full value of commuted pension exempt. If you are not receiving gratuity, sir gratuity तो नहीं आ रहा है, okay, then 1/2 of the full value of commuted pension. What I said? 1/2 of full value of commuted pension is exempt. Now what is this full value of commuted pension? Suppose example, you asked your employer that sir मेरे को 60% pension commute कर दो. You asked that please give 60% of the pension in lump sum. So they said okay, and they gave you 6 lakhs after all the actuarial calculations, whatever mathematical calculations are. They gave you 6 lakhs for 60%. So you received this, happy, no problem at all. Now for 60%, if it is 6 lakhs, for 100%, how much? For 60% for 6 lakhs, okay, for 60% 6 lakhs, for 100% how much? So sir 10 lakhs, yes. This is full value of commuted pension. So when I am multiplying with 1/3 or 1/2, it should not be 6 lakhs into 1/3 or 1/2. It should be 10 lakhs into 1/3 or 1/2. Suppose you are in receipt of gratuity, and I continue with the same example. You are receiving gratuity. So I said only 1/3 of the full value of commuted pension is exempt. So what will happen? 10 lakhs into 1/3. So 3,33,333 is exempt. But how much is the received amount? Sir, 6 lakhs is received. Minus 3,33,333. So how much? Sir, 2,67,770. This will become taxable. So whatever is the full value of commuted pension, you calculate you take actual commuted pension received. Actual commuted pension received, that is 6 lakhs, less 1 by 3 of full value of commuted pension. So that's why 6 lakhs minus 3,33,333, you get taxable commuted pension as 2,67,777. This way you should be able to calculate. Are you clear? Suppose you are not receiving gratuity, then what will happen? Then also the commuted pension received 6 lakhs less 1 by 2 into commuted value of pension, 1 by 2 into 10 lakhs. So it will come to 5 lakhs. So 6 lakhs minus exempt amount 5 lakhs. So 1 lakh is taxable commuted pension. Like this you should be able to do. Now because you received 60% in lump sum, now monthly pension you are receiving suppose 20,000. Now again you will receive 20,000. No, because you converted into lump sum, right, 60%. So you have to forego that 60% monthly pension. That means out of 20,000, 60% means 12,000 you have to forego. That means only 8,000 monthly pension will be received, and that is fully taxable. This logic you should have while you solve this problem. Okay. Chalo, let us recap pension and let's go forward. Hey, if it is uncommuted monthly pension, fully taxable. If it is commuted pension, lump sum pension to government employees, exempt. Non-government employees, ask a question. Are you receiving gratuity? Not receiving gratuity. If you are receiving gratuity, then 1 by 3rd of the full value of pension, exempt. That means take actual commuted pension received minus this exemption, then taxable. Same way, if you are not receiving gratuity, then 1 by 2 of the full value of commuted pension will be exempt. That means you take actual commuted pension received minus this exemption, balance is taxable. And how will you calculate full value of commuted pension? If for 60% 6 lakhs received, then for 100% how much? That how much will be treated as commuted value, full value of commuted pension. Now use this same example while you solve the problem, because if you remember this example, all type of cases you can solve easily. And once you commute some percentage of pension, automatically your monthly pension will be reduced by that percentage. This also you should not forget. Now come to leave encashment. What do you mean by leave encashment? Right? Leave encashment, some books say leave salary. Nothing but when other employees of your organization were taking leave, enjoying, you also had the privilege of taking leave and enjoying, but you did not. You worked even when you had the option to take leave. Employer says, shabash, very good. And employer gives you some whatever salary proportionately he will pay to you in lump sum in the name of leave encashment. That means you could have taken the leave, but you sacrificed. Now you get the option to encash it. Cash karo. Right? Now, if the leave encashment is received during the tenure of service, you are working and during your tenure you received it. It is fully taxable. But if you receive it at the time of retirement and you are a government employee, Damaji, fully exempt. So if you are a government employee and you receive leave encashment at the time of retirement, fully exempt. But if you are non-government employee, then what? Then they simply said, if you are non-government employee, they simply said actual leave encashment received less least of the following 4. Actual leave encashment received less least of the following 4. What are that? Then only you will get taxable leave encashment, correct? So what I said, actual leave encashment received less least of the following 4 is taxable leave encashment. But what are the 4 things which are least? Out of that 4, what is the least? How to calculate? I am teaching you now. Take actual leave encashment, first item. Second item 3 lakhs. Very easy. Same like gratuity we did. So actual leave encashment first item. Second one 3 lakhs statutory limit. If there is any exempted amount that you can reduce, no problem. Next thing, third thing. Should remember that 10 into average monthly salary. What I said? 10 into average monthly salary. Fourth one, unearned leave into average monthly salary. Leave encashment for non-government employees. 4 items are there which you should remember, least of the following 4. Actual leave encashment, second one 3 lakhs, third one 10 into average monthly salary, fourth one unearned leave into average monthly salary. Actual leave encashment is given in your question, so no problem. 3 lakhs is statutory limit, no problem. If in the question they say that already exempt some 50,000, 60,000, something like that. So that already exempt under leave encashment should be reduced from this 3 lakhs. Rarely they give, but yes, they give. Third thing, 10 into average monthly salary. So what is salary? Salary is equal to basic pay, DA retirement plus commission as a percentage of turnover. So what I said? Salary is equal to basic pay, DA retirement plus commission as a percentage of turnover. ठीक है, बढ़िया है. But I will tell you basic pay, DA retirement plus commission as a percentage of turnover. So we should not take just salary. We should take average monthly salary. So what is average monthly salary? Again 10 months average salary. Oh, is it same as the gratuity topic where it is not covered by Gratuity Act? If you say feel the same, the answer is yes and no both. Right? Salary definition is same, basic pay, DA retirement, commission as a percentage of turnover. But here 10 months average I said, na, that is not same. In gratuity what I said to you? Sir, in gratuity you said if somebody retires on December 17th, then you leave the December month and calculate February to November, 10 full months before the date of retirement. So before the month of retirement is the right word to use. So we are ignoring the month of retirement when it comes to gratuity not covered by Gratuity Act. But in leave encashment, before the date of retirement they said. Suppose you retired on 17th December. So they will say February 18th to December 17th. February 18th to December 17th. These are the 10 months you should calculate under leave salary. And because of this confusion, not able to compare between not covered by Gratuity Act and leave encashment, many students do mistake. And I don't want you to do, that's why I am giving you full clarity. But you also want your friends not to do this mistake, right? Share this video with them. So what I said basically to you, that when it comes to gratuity, December 17th somebody retired, Feb to November you counted. Perfectly right in gratuity. But in leave encashment, 10 months average, you should calculate from February 18th to December 17th. Like this you should remember. You will never do mistake in solving the problems. Okay. So what I said, if you are non-government employee, then I said actual leave encashment less least of the following 4 is taxable. So what is the first one? Actual leave encashment. Second one 3 lakhs. Third one 10 into average monthly salary. We are fully clear. But fourth one is the most complicated. Unearned leave into average monthly salary. Now average monthly salary you know. But what is unearned leave? Let us discuss. First thing, meaning I will tell you. Suppose you actually worked during holidays. Right? So you did not enjoy that holiday, right? That holiday which you could have enjoyed, but on that day you worked, such holidays where you worked are called as unearned leaves. So you did not earn it, you did not take it. Such are called as unearned leaves. Clear? Now let's understand more in detail. Income tax says that employer may have whatever thoughts in his mind. We are least bothered. We only considered 30 days annum per annum as leave. Suppose example, your employer gives 45 days leave in a year. Income tax says 45 days or 30 days as per income tax, whichever is lower. So 30 days will be treated as leaves allowed per annum. Okay, very important thing. Leaves allowed per annum. Suppose your employer gives 20 days leaves only. Then income tax says 30 days, 30 or 20, whichever is lower. So maximum leaves in a year can be 20 days only. Right? It is least of the following two. As per income tax, 30 days. As per employer, 20 days. Whichever is lower, 20 days. So 20 days is the maximum leaves which you can take. Now how many years you worked? Whatever years. Sir, 27 years, 11 months. Ignore the fraction. Okay. So only 27 years you take. So completed years of service. So whatever leaves are available as per income tax, which we calculated now, into number of years of service minus leaves taken. Minus leaves taken. Now this data they may give in months or they may give in days. If they give in days, calculate in days, no problem at all. But at the end, divide it by 30. Right? At the end, what you do? Divide it by 30. So that you will get in months. Because salary you get monthly, right? Not daily, right? That's why. So how to calculate unearned leave in a question? Because I know CMA Institute books you see, lot of complications are there. So I'll simplify it. I said maximum leaves you should calculate first. So what is it? As given by employer or as per income tax, that is 30, whichever is lower. This is maximum leaves. Into completed years of service, whatever extra months are there, you ignore. Fraction ignored. Once you get these maximum leaves to be given into years minus leaves taken. Now if this data, this is called as unearned leave. This is called as what? Unearned leave. If this data is in days, divide it by 30. If it is in months, ignore. Now you got unearned leave into average monthly salary. क्या बोला मैं? Unearned leave into average monthly salary. With this you completed the entire thing. Okay, this is how we calculate the fourth point. So now leave encashment is fully clear to you. You even compared with gratuity, right? In gratuity, retirement month days are ignored, and in leave encashment they are also considered for calculating 10 days, 10 months average. Now let's recap. Leave salary means what? On the days of leave you worked, so the employer pays for days, that days. If you are taking that money, leave encashment or leave salary, in during the tenure of service, it is fully taxable. If you are taking at the time of retirement, you are government employee, it is fully exempt. If you are non-government employee, then take actual leave encashment minus least of the following four, will be balance will be fully taxable. What are the least of the following four? First one, actual leave encashment, that's given in the question. Second one, 3 lakhs minus already exempt, that's given in the question. Third one, 10 into average monthly salary you need to calculate. I said salary is equal to basic pay, DA retirement plus commission as a percentage of turnover. 10 months average means you should calculate from the date of retirement, not the preceding 10 months, leaving the date of retirement. And then unearned leave we calculated just now. We discussed that maximum leaves as per income tax, that is 30, or leaves given by the employer, whichever is lower, into completed years of service, but ignore the fraction of days or months. Take only total completed years minus leaves taken. If it is in days, divided by 30, then you get unearned leave. That's how you do. Come to the next topic, and that is retrenchment compensation. What is this? Suppose your employer don't like your services, he says get out from here. So he may pay you 2 months, 3 months, 6 months, whatever salary as per the terms if you are abruptly removed. Then how to calculate this? So the answer is very simple. Hey, these are all theoretical things, no numerical questions will come on retrenchment as well as voluntary compensation. Okay, so just theoretical things, listen carefully. First thing, take actual retrenchment compensation received less least of the following three. What is the three? First one, actual leave and actual retrenchment compensation received. Second one, 5 lakhs rupees, right? Third one, average monthly salary. Now what is salary here? Salary is equal to all everything but exclude bonus and employer's contribution to provident fund. Salary means everything excluding bonus and employer's contribution to provident fund. Now this salary average we have to take. Average means 3 months average, not 10 months, only 3 months average into 15 by 26 into completed years of service, into 15 by 26 into completed years of service, right? This way you should remember retrenchment compensation. Voluntary retirement. Sometimes you have to retire at the age of 60 but employer says you can leave early sir, we can give you some extra money if you want to get out now. This happened in government departments a lot. It should be as per the VRS scheme. But anyhow, we'll not get into all that. Taxability says that take actual VRS received less least of the following four. First one, actual VRS. Second one, your 5 lakhs rupees. Third one, salary per month into 3. Salary per month into 3 into completed years of service. Ignore the fraction. Salary per month into 3 into completed years of service, ignore fraction. And last thing, salary per month into remaining months of service. Like somebody has to retire at the age of 60, but I said 58 he retired. That means 2 years are there, right? So remaining months will become 2 years, in a year 12 months, so 24 months. So salary per month into 24 months is the fourth one. So voluntary retirement compensation, what I said, that take actual voluntary retirement compensation less least of the following four, and the first one is actual VRS, second one is 5 lakhs rupees, third one is salary per month into 3 into completed years of service, fraction ignored, and fourth one is salary per month into remaining period of service. This way we should actually remember each and every topic what I tried to convey to you. Are you all clear? Yeah, let's start with the allowances. चलिए जी शुरू करते हैं अलाउंसेस की कहानी मेरी जुबानी. So what is allowance? Allowance is a specific payment made for a specific purpose. Like example, tiffin allowance. जा बेटा टिफिन करके आ जा. Lunch allowance. जा बेटा lunch करके आ जा. So this is called as tiffin lunch allowance, which we discussed. So allowance is given for a specific purpose. House rent allowance. अरे जा बेटा तेरा किराया भरने के लिए पैसे दे दिया. Entertainment allowance. जा बेटा मजा करके आ जा. So this is what allowance is. Allowance are payments made by the employer for a specific purpose. Okay, to meet specific needs of the employee. This is called as allowance. Clear? Now there are certain allowance which we are going to understand where up to actual expenditure is exempt. क्या? Up to actual expenditure is exempt. Balance amount is taxable. So let me tell you with simplicity. Suppose I gave you 10,000 rupees for uniform allowance. I am an employer. My employees are Divya, Teja, Jagdish, Pooja, so many are there. So I gave them uniform. So when I gave them money for uniform 10,000 rupees, will they spend entire 10,000 for uniform? Tintla 4,000 we will complete uniform, 6,000 we will keep in pocket. So I don't mind, but the income tax definitely minds it. They say this 6,000 is fully taxable. So what they said, that whatever you did not spend, you received from employer, yes sir. You did not spend, yes sir. So it is taxable income to the employee. This is what we are going to discuss. Now first one, traveling allowance. Suppose you are on an outstation, you are outside. So you are working in Hyderabad, but you have to go to Uttar Pradesh for some work. So you are going out for work. So therefore traveling purpose, if any allowance is given, that is called as traveling allowance. So whatever actual amount received as allowance minus whatever is spent, balance is taxable. Okay. Same way second one is daily allowance. Suppose you are working here at Hyderabad, but for your daily needs you need some money. Now you receive 1000 rupees per day, but you spend only 200. So balance 800 is taxable. Third one, your conveyance allowance. Suppose for office work you are traveling here there. Like when you also work as an articled assistant, you are sent to income tax department, GST officers, yes or no? So whatever, when you travel there, some payment is given by your boss to you. Ki okay, you take this 300 rupees for your travel. That within the city we call it as conveyance allowance. अगर वो within the city है तो हम क्या बोलेंगे बच्चा? Conveyance allowance. So we discussed about traveling, daily and conveyance. These three things seem to be similar, right? But little different. So these are allowed as deduction only on actual payment basis. So take the allowance minus expenditure, balance is taxable. Now the exemption which we discussed here in these 3 points is allowed if you opt for regular scheme of filing returns or you opt for 115 BAC. Now what it is we'll discuss in a separate chapter. But whatever way you file income tax return, you will get the benefit of the exemption for these 3 things. What are they? Traveling allowance, daily allowance, and last one is conveyance allowance. Now I am going to talk about helper allowance. Suppose I have to do lot of shootings and lot of work is there. So the employer gave me helper. So helper allowance he gave. So whatever unspent amount is, that is taxable. Now helper is different and servant is different. Suppose I have to do this recording shooting, Divya is working with me, Teja is working with me, they are called as helpers. In the morning, a woman comes to clean all the utensils and wash clothes, she is servant. So servant is for household and helper is for professional work. This is the difference. So helper allowance, so what will you do? Helper allowance received minus actual amount spent, balance is taxable. Same way academic development allowance, professional development allowance and research allowance. In all these cases also, these are given for teachers, researchers, right, to professionals for their updating of knowledge. Whatever actual allowance received minus whatever spent, balance is taxable. So whatever spent is exempt. Clear? So these 3 words can be used: academic development, professional development, research allowance. Okay. Last one is uniform allowance. So if you are working in certain organizations, you get proper uniform. There we can use the word uniform allowance. So what will happen if you get uniform allowance? Uniform allowance, actual amount received minus spent, balance will be taxable. The amount spent is exempt. So 6 allowances we discussed in this category. First one is traveling, second one is daily, third one is conveyance, fourth one is helper not servant, Fifth one is academic development, professional development, research. Sixth one is uniform. Now uniform allowance is different and dress allowance is different. Uniform allowance is for office use. ड्रेस कहीं भी घूमो, शौक करो, मजे करो, है ना, आपकी मर्जी. ड्रेस इज पर्सनल इन सिंपल लैंग्वेज. ओके, सो ड्रेस अलाउंस इज फुल्ली टैक्सेबल, राइट. Oh, dress allowance 10,000 received, 6,000 spent. So, sir, 4,000 taxable. No, dress is fully taxable. Total 10,000 taxable. Uniform unspent amount is taxable. Okay, clear to all of you? Yes. And under 115 BAC, the exemption benefit is given only for traveling conveyance daily. That means if you are opting for regular scheme, you will get the benefit for all these 6, but if you are opting for 115 BAC, you will get only for the first 3 benefit of exemption. That means, suppose in the exam question, they say if the assessee opts for 115 BAC, if the assessee don't opt for 115 BAC, solve the problem in both the cases, right? Traveling, what will you do? Suppose you got 10,000 for traveling, you spent only 6,000. So 4,000 is taxable in both the schemes. But if it is uniform, you get 10,000, you spend 5,000. 5,000 is taxable under the regular scheme. That means whatever spent is deducted and balance 5,000 is taxable. But in 115 BAC, total 10,000 whatever you got for uniform is fully taxable. Clear? So what I wanted to say, please remember that under 115 BAC, uniform, helper and academic development become fully taxable. Clear? Yes, sir. Now come to the second part. Here specified amount is exempt. These are 7 items which I am going to discuss now. Only specified amounts are exempt. So whatever actual expenditure or specified amount, whichever is lower, will be exempt. So let's discuss the first one. First one is children's education allowance. So children are going to school, parents are sending. So parents get allowance from the employer because they are working in some company for the children's education, and that is to some extent exempt. How much? Only for 2 children. How many children? Only for 2 children it is exempt. Great. But the exemption is only 100 rupees per month per child. How much? 100 rupees per month per child. Kya? 100 rupees per month per child. Okay. Suppose example, you are getting 1,000 rupees allowance for one child per month. Only 100 is exempt. That means 900 is taxable. Like this you should understand. Now, what is the definition of children? Children includes stepchild, adopted child, everything is okay. But illegitimate child, that means without marriage child, is not considered as child for this income tax purpose. Okay. Second point. If parents both are working, mummy working, daddy working, both can enjoy the benefit for the same child. That means both can get the benefit of exemptions. No problem at all. Okay. The benefit of exemption is given only for 2 children, not for more than 2 children. Suppose the child is going to school or not going to school, still benefit of exemption can be claimed. The child is minor, major, married, unmarried, still you can get the benefit of exemption if you are getting children education allowance. Clear? Any doubts? You should not have any doubts while solving the problem. All this will be useful. So what I said, children education allowance. For how many children it is given? Only for 2 children it is given. How much exemption given? Actual allowance or rupees 100 per month max for 2 children, it is allowed. Okay, same way hostel allowance also, but 100 will be replaced by 300. So hostel allowance, actual allowance received or rupees 300 per child, whichever is lower will be allowed as exemption. That is also maximum 2 children, right? This way you should remember. Third concept, what I said to you. Third one is tribal area or scheduled area allowance. Here 200 per month is given as exemption. Suppose you went to tribal area for working for 4 months, then you will get only 800 as exemption. Suppose the employer gave 2000 per month, 2000 into 4 months, 8000. Exemption is only 800, 7200 taxable. Clear to all of you? Yes or no? Super. Underground allowance, 800 per month is given as exemption. So clear to all of you? Yes. So underground allowance means those who are working under coal mines, right? So for coal mines they are working, digging deep into the land, right? Then for them underground allowance is given. 800 is the maximum exemption given. So whatever actual allowance or 800 per month, whichever is lower, will be allowed as exemption. And next thing which we discussed, children education allowance is over, hostel allowance is over, tribal or scheduled area allowance is over. Fourth one is underground allowance is over. Fifth one is truck driver allowance. Now this is given for truck drivers only, or those who are transport employees. Okay, how much? Actual allowance received less least of the following two. What I said, actual allowance received or less least of actual allowance received minus least of the following two. First one, 70% of allowance, not total allowance, 70% of allowance. And second one is 10,000 per month. 10,000 per month. Suppose example, you receive 15,000 as allowance. So actual allowance received by truck driver 15,000 less least of the following two. So 15,000 into 70%. So it will come to around something around 10,500. Second one is 10,000 statutory limit. So whichever is lower, 10,500 or 10,000, whichever is lower, 10,000 is allowed. So 15 minus 10,000, 5,000 will be taxable for truck driver. Next one is transport allowance for disabled employees. Now here only 3,200 is allowed as exemption for disabled employees only, disabled people only. Okay. Now let's understand. Suppose you are going from office to home, home to office, disabled person, whether orthopedically, visually disabled. So okay, how much exemption? Whatever actual allowance received. For transport 5,000 is given, less least of the following two. Actual 5,000, standard 3,200, whichever is lower 3,200. So actual allowance 5,000 received, minus least of the two is 3,200. So 5,000 minus 3,200, 1,800 is taxable, right? And this is only given to disabled people. Suppose office to home type of situation, they gave allowance to normal people, then it is fully taxable. Only to disabled it is fully exempt. Oh, to some extent exempt. Hill compensatory allowance, if you are working on mountains and hills, then 300 per month is given as exemption. Very less actually, but yeah, government did not change it. So actual allowance received less least of the following two. Actual allowance or 300 per month, whichever is lower, will be allowed as exemption. So remember this. Now for children, what is the statutory limit? 100 per month. For hostel 300 per month. For tribal area 200 per month. For underground 800 per month. For The transport employees truck driver allowance, 70% of allowance, or 10,000 per month, whichever is lower. For transport employees who are disabled, 3,200 per month. For hill compensatory, 300 per month. These key things you remember. Balance anyhow, it is very simple. Actual allowance received less least of the following two. In that, actual you will take normally, except in the case of truck driver. And second one is this limit which we discussed. And balance is taxable. Simple. Right? Now come to the most critical one, and that is house rent allowance. On this many problems are given and is very interesting topic to discuss. If you are receiving house rent allowance and you are staying in your own house, हम तो हमारे घर में रहते हैं जी, then it is fully taxable. The house rent allowance received is fully taxable. But sir, what about government, non-government? There is no difference at all. If you are a government employee or non-government employee, in both the cases, the same rules will apply. So what are the rules? So what you have to take actual HRA less least of the following three. Okay? Least of the following three is exempt. First one actual HRA, in the list also first one is actual HRA. Second one is rent paid minus 10% of salary. Rent paid minus 10% of salary. Third one is 50% in case of 50% of salary in case of metros and 40% of salary in case of non-metros. Now what is the thing to be remembered? First thing I said, if you are staying in your own house or you are not required to pay any rent, in that case your house rent allowance is fully taxable. In all other cases, whether government or not, exemption is given to some extent. So how to calculate? Take actual HRA. This is given in the question, take as it is. Less least of the following three. So in that also first one actual HRA, same given in the question. Second one rent paid, given in the question. Minus 10% of salary. Here we need to be careful. What is salary? Salary is equal to basic pay plus DA retirement plus commission as a percentage of turnover. What I said? Basic pay plus DA retirement plus commission as a percentage of turnover. Okay? Basic pay plus DA retirement plus commission as a percentage of turnover. Here also don't take fixed commission. Okay? Only take commission which is given in percentage form and where you have to multiply with turnover sales and get the commission. So basic pay, DA retirement plus commission as a percentage of turnover. Once you get this salary, multiply with 10%. Whatever you get, you deduct it from rent paid. So rent paid minus 10% of salary. Okay. Third one is 50% in case of metros. Metros कौन है? Mumbai, Delhi, Kolkata, Chennai are metros. So in that case, standard of living cost is more. So 50% of salary. And other than metros, like Hyderabad also non-metro, 40% of salary. This you calculate and you will get the taxable salary. Once you take actual allowance minus this list of the three, taxable HRA you will get. And that you have to put in the main pro forma which we discussed. Clear? Sometimes there are lot of changes, lot of twists to actually confuse you. Suppose they change the salary, whether basic, DA or commission they change. If they change, then how to do? Suppose sometimes they may change the place. How to do? Sometimes they change the rent. What to do? Right? Place can be changed, rent can be changed, salary can be changed. Right? What to do? So whatever such change happens, I will tell you with simplicity. solve the problem by considering that it is not a whole year problem. Normally whole year problem, right? For the whole year single calculation. But if there are changes, then divide the periods based on change. Suppose first 3 months are there, nothing changed. So calculate for that 3 months. On 1st July, suppose place changed. What impact it has? See, if 40 becomes 50%, then calculate accordingly for the new place. Suppose salary changed after on 1st September, then accordingly change the salary and calculate for the balance period. Like that if you do, then solving HRA problem is not at all a difficult task. Okay? But you should be able to identify where the change is and how it impacts, and calculate proportionately for 2 months, 3 months, 6 months as per the change given in the question. Many students bother, अरे सर इसमें तो कुछ कुछ की कर दिया, he has changed so many things. अरे nothing happens. If they changed, you also take some small strides to solve the problem. लास्ट में चारों तीनों का दोनों का जो भी है टोटल कर देना, आंसर आ जाता. Okay. Now fully taxable allowances. City compensatory allowance. Sometimes you change the city, right? From one place to another place. Suppose you are working in Hyderabad, you shifted to Delhi. So your city changed. When your city changed, employer gives you city compensatory allowance. And this is fully taxable. Entertainment allowance. Are mojja hi mojja. Are fully taxable. Right? Deduction is given under section 16. We'll discuss later on. But here, please remember, entertainment allowance is fully taxable. Now, I will tell you here that all other allowances and entertainment allowance is different. In all other allowances, you deduct the exemption and balance you show it as taxable allowance. But entertainment, it is not like that. Whatever allowance you got, show it as fully taxable. Later on, after gross salary, you claim the deduction, okay, for entertainment allowance. This is unique. No problem. Dearness allowance. Arey महंगाई, right? So always high re महंगाई. From 1970 there are songs. So everybody is suffering. You feel that inflation is today, but it is always. So don't worry. Always focus on skills to earn more and more money. Inflation should not beat your earnings. That's what you should focus on. But anyhow, as a matter of some rescue, employers pay you dearness allowance to meet the cost of living. It is fully taxable. Now, we understood city compensatory allowance, entertainment allowance, dearness allowance, fully taxable. Medical allowance, to pay medical bills, whatever, right? Fully taxable. भूख लग रही है ना, टिफिन करेंगे, lunch, dinner, all are fully taxable. Tiffin allowance, lunch allowance, dinner allowance, all are fully taxable. Servant allowance is fully taxable. Dress allowance is fully taxable. Warden allowance is fully taxable. Cash allowance is fully taxable. Overtime allowance is fully taxable. Like this, you should remember the list of fully taxable allowance. Suppose you, in the question, you get some allowance. If it is given under section 10 subsection 14a, 14b exemptions, then calculate accordingly. If it is exempt, calculate accordingly. But in all other cases, it is fully taxable allowance. So, fully taxable allowances list we discussed: city compensatory allowance, dearness allowance, entertainment allowance, medical allowance, tiffin, lunch, dinner allowance, servant allowance, proctor allowance, marriage allowance, family allowance, overtime allowance, cash allowance, warden allowance, right? These are all fully taxable allowances. Remember with me. याद हो जाना चाहिए. Now, when I talk about the next thing, that is exempt allowance, I am not talking about a particular allowance. I am talking about a particular person. And for this particular person, all allowances are exempt. Like take that Indian embassy people are working outside India. For government of India they are working outside India. They get basic salary, allowances, all that. So for them, allowances are fully exempt. Whatever allowance, fully exempt for them. Okay. So Indian citizens who are government employees working outside India and receiving salary outside India, for them all allowances are fully exempt, even full perquisites are exempt. Okay, clear? Suppose some teachers are there, professors are there, are working under the SARC agreement, cultural exchange program. I actually, the word is. Few of my teachers are working under the scheme and went to Maldives for teaching. So, up to 2 years, no tax at all. Even some friends are working in Ethiopia, Eritrea, right? So, what I said basically, up to 2 years, zero tax for them. So, what I said, the teachers, professors working under the SARC agreement for cultural exchange for the first 2 years, fully exempt, no tax. Suppose somebody comes from Maldives to India to teach some classes here, for them up to 2 years, all allowances, all perquisites, all basic salaries, everything fully exempt. Suppose Supreme Court, High Court judges are there, they receive sumptuary allowance. Basically, these allowance is given to treat the guests. So many guests come and meet the Supreme Court, High Court judges. So to treat them, whatever allowance they get are fully exempt. So actually allowances given to Supreme Court, High Court judges are exempt. That's it, you remember. Last thing, if suppose United Nations organizations employees work in India and they receive any allowances, for them it is fully exempt. So anyhow, every country has to do favor to UNO for ensuring peace. How much they ensure, God knows, but yeah, we have to give some tax benefits. So it is exempt. So clear? With this we completed the first part of the lecture, that all allowances, all the basic part, retirement benefits I tried to cover. I hope you understood. Notes are given in the description. You would have subscribed to the channel, like the video, give a comment, share with your friends so that everybody can be benefited. Of course, I will also be benefited. And second part will be coming in the next 2 days. So stay connected. All the best.